Midas Letter joined us now on the fast line. He joins us all the way from Peru, in fact. And James, I'm assuming you're doing some boots on the ground research out there.
Yeah, I'm looking at a gold mine that I own down here and fending off Chinese buyers of gold mines.
You're literally fending them off.
I sure am. You wouldn't believe South America's crawling with Chinese nationals trying to buy gold mines down here.
Wow. Okay, James, walk us through why you see gold to $1,500 by the end of March.
Well, first of all, gold's been growing at an average of $90 per year since 2001. Every time the Fed prints another $500 billion, gold goes up $100. Has the Fed made any sort of indication that they're going to stop doing that? Absolutely not. They're going to keep printing money, and gold is going to keep rising at about $100 a year. I think it's even going to increase in time. You're only going to see greater demand for what has become the reserve currency of choice for a lot of countries, and it is the monetary metal for 2011. There's no doubt about it.
Hey, James, in terms of acknowledging an improvement in terms of the data here domestically in the U.S., I think you would potentially agree that we are seeing a little bit of a recovery in a lot of this data. Your call here for 1,500 by March, if you get an improvement in terms of unemployment, would you be ready to reduce that call?
I don't think so. You know, a lot of this improvement is a direct result of all of the stimulus and the quantitative easing that has happened. And so, if anything, I believe that recovery is more or less a bubble that is going to crumble, much like the U.S. dollar is going to continue to crumble in 2011. And all the quantitative easing in the world is not going to, for the long term, reduce that.
But James, you know, you talked about how gold's risen $90 per year since 2001. There was no such thing as QE2 back then. What was driving gold then versus what is driving gold now? I have a tough time taking the other side of this because I agree. Central banks around the world will continue to diversify. But if the world becomes a safer place, people will not be running the gold assets. And you can see the S&P in years when it's had performance in the last 5 years. You've seen gold trade down.
That's true, but Ben Bernanke himself has said that he's targeting the performance of the various exchanges, and so in this phase, you know, he's pointing right at those exchanges and trying to get those numbers up. The long-term fundamental problems that initiated the bull market back in 2001, i.e. too much U.S. dollars in the system and overvaluation of U.S. dollars, continues to be present and has in fact tripled since then. So that's what started the bull market in gold 10 years ago, and all of those factors have only amplified by a factor of 3, and that's what's going to keep driving gold and demand for gold.
James, thanks so much for joining. And just, you actually own the mine you're checking out in Peru?
I'm part owner of a mine in Peru, yeah, producing gold mines.
So there you have it, James's personal position in gold. Well, he's part owner of a mine.
With the Midas letter.
Right, with the Midas letter. James, thanks so much, James West of the Midas letter. It would be something if you were bearish gold, an author of the Midas letter. All right, let's recap the halftime poll of the day here. This is what you all said about gold. 70% saying the gold trade is not over, and this is just a short-term correction. 70% still want to get in.
Well, and I think with that poll, Brian and I were having a conversation in the green room before about this. The real question is, do you believe that the Federal Reserve will go all the way and have to do the full QE2, or will they have the ability, as you and I have talked about, to stop? If you believe they're going to stop, then really the demand for gold, what is it?
But also, I mean, isn't there incremental demand for gold that will come out simply because the stock market is going to move higher? I mean, if you're a believer that the stock market this year will go higher, doesn't that automatically take some of the speculation out of the price of gold?
It should. It should.
Theoretically.
That's what I think we're starting to see a little bit now. But there's still a very tight market there that we're talking about. And then you, again, have to look at the international demand for gold via China and India. I think that's really where it's coming from.
The strength of today's move may have come. A lot of guys are also expecting the rebalance of the commodity index and that there's actually going to be this type of a move. I got like 15 Bloombergs this morning from brokers talking about this. That, to me, when gold's down 2.3% on a day when the Dixie's up, 25 to 30 basis points, you have something more going on, and I think that's what it was.
All right, let's go out to the prop desk. You know, we've got a new face out on the prop desk today. Hi. A virgin to the prop desk, Josh Brown. Hey, Josh.
Hi. How's it going?
What are you working on? Where do you stand on the gold trade here?
It's a worldwide groupthink. 70% in agreement that it's just a correction after the gains of last year, and nothing makes me happier as someone who's taken gold off than to hear that the Chinese are invading Peru for gold mines. So, if this is the world we live in, let me tell you a couple of things. 1,500 is your upside target, but we're agreeing that 1,250 is support. the risk reward's not there to be long at this price if you're not already in, to be piling on here. The other quick thing I'll just add to the mix here, the gold miners have just been a massive disappointment. The bigger they've been, the worse they've been. I was looking at Barrick. I was looking at a couple of the large cap names. They might as well have been selling something else because they really have not kept pace at all. And this was their moment, 30% up last year.
But Josh, the junior miners did fantastic.
Whole different ball game, right?
Right, whole different ball game there. And I mean, do you really think that 1,500 is the peak here for gold if we have an awful lot of demand? I mean, I know it's funny to say that the Chinese are invading Peru, but they actually are.
Yeah, I don't do price targets. What I'll tell you is that gold will work until it stops working. I think it's become the plaything of speculators. It has nothing to do with safety or QE2 or anything like that. People are quote-unquote playing gold. When they decide to move on and play something else, you'll see it in the charts.
But what's the trigger for that then?
You might have already begun to see the beginning of it. We're seeing a new year. People are becoming more interested in stocks again. People are looking at small cap growth companies. People are looking at mid caps. They are not talking about guns and gold on the blogs. They're not talking about it in the streets. You might have seen this asset class kind of have seen its peak in popularity.
Right. All right. Well, of course, we'll be checking in with Josh throughout
Talking
the
about
show.
Guns N' Roses a little bit.
Yeah, a little bit.
Making a comeback.
But ultimately, I have the most confidence in the fact that a very brilliant woman who's sitting very close to me actually made some purchases in Freeport-McMoRan puts today. Copper and gold Freeport-McMoRan.